2025, we need to seize the time to examine the major trends in the global economy and get ahead of the curve to seize opportunities. The Federal Reserve, the master switch for global capital, is expected to cut interest rates only twice in 2025, and the impact will be limited. The US CPI in January rose to its highest level in 9 months. With inflation remaining stubbornly high, it will be even more difficult for the Fed to cut interest rates. The US stock market is currently propped up by a few major tech giants, but the financing costs for traditional companies are rising under high interest rates. If AI technology does not develop as expected, the stock market could collapse from its high perch. A cautious approach to the stock market is advisable. The uncertainty of the stock market has, in turn, made gold a hot commodity. The US government is approaching its debt ceiling, with $36 trillion in US debt and interest payments amounting to hundreds of billions each year. The likelihood of continued money printing by the US could accelerate the global central bank's move away from the dollar. The status of gold as a world currency is becoming more stable. Although its price is already high, the outlook remains optimistic, and it is worth paying attention to. The commodity market is closely related to the Russia-Ukraine conflict. In 2025, if the conflict eases and Russia's oil supply is released, oil prices could decline. With global economic growth expectations being downgraded, demand for commodities will also be affected, and investment returns may not be ideal. In the second half of 2024, the secondary housing market in some domestic first-tier cities began to warm up. Policy benefits continue to flow, with interest rate cuts, urban village renovations, and support for affordable housing loans providing a solid foundation. The LPR is expected to continue to decline in 2025, and housing prices in first-tier cities are likely to stabilize. Home buyers with rigid demand can consider purchasing in 2025. However, third and fourth-tier cities need to be analyzed on a case-by-case basis. In 2025, global economy will undergo significant changes, with the possibility of the US imposing additional tariffs. However, China's manufacturing industry has been the world's largest for 15 consecutive years, with a clear advantage in production capacity. Even with tariffs, the cost of Chinese export goods remains competitive. In the short term, industries exporting to the US may be impacted, but in the long run, this will reshape the global trade landscape, and trade cooperation between China and other countries will become even closer. 2025 marks the beginning of a new global economic cycle. As investors, it is essential to pay attention to changes in Federal Reserve policies, long-term opportunities in the gold market, uncertainties in the commodity market, real estate opportunities in first-tier cities, and the reshaping of domestic industry structures. In the new year, follow us as we explore the mysteries of the economy together.